Good morning and welcome to the ADS Securities Markets Update. Beginning today with the U.S. jobs report, the data showed solid outcomes, including the non-farm payrolls, employment change, and the average wages, while the unemployment rate unexpectedly increased slightly as the participation rate also ticked higher. The U.S. economy added more than 280,000 new jobs in May, or for the month of May, compared to 221,000 in April, while the estimates were to add around about 226,000 in new jobs, and this is also the highest increase since December of 2014, or since December of last year. The year-over-year average earnings also advanced sharply toward 2.3%, up from 2.2%, and the month-over-month increased by 0.3%, while the estimates were to add around 0.2%, and this is again the highest since August of 2013. As for the unemployment rate, it advanced also toward ticked higher toward 5.5%, up from 5.4%, as the participation rate also increased slightly towards 62.9%, up from 62.8%. As a result of these figures, the US dollar also soared across the board as June's rate hike is back on the table again. However, we still believe that the Federal Reserve will keep the current rate or the current policy unchanged or on hold in June, and likely to wait for further evidences, especially after the recent slowing down. As for the Asian session today, there were a few economic releases from China and Japan, which had a notable impact on the market. Beginning with Japan, the current account surplus narrowed or eased back more than expected toward, or declining toward 1.27 trillion yen in April, down from 2.07 trillion in March, while it had been anticipated also to decline toward 1.45 trillion yen, and this is the lowest current account surplus since August of last year. The good news came in from the final GDP reading, which has been revised sharply higher toward 1% compared to 0.6% initially, while the estimates were to be revised up slightly toward 0.7%, and this is the highest growth rate since Q1 of 2014. In China, the trade balance surplus also increased sharply toward, or more than expected, rising toward 59.5 billion in May, up from 34.1 billion in April, while the estimates again were to rise toward 44.9 billion, and this is also the highest trade surplus since February of this year. The export also posted the third monthly decline in a row, while the imports also declined by the most since February, declining by 17.6%. Going forward to the European session today, there are a few economic figures will be released throughout the day, which are unlikely to have a notable impact on the market, but we will be waiting for the European reaction to the US jobs report. In Germany today, the industrial production is expected again to rise to rise by 0.6% in April compared to 0.5% or a decline of 0.5% in March, which would be the first and the biggest monthly increase in almost 3 months. The German trade balance also surplus may ease back toward 18.1 billion in April compared to 19.3 billion euros in March. Finally, the Eurozone Sentex investor confidence also may decline slightly toward 18.9, down from 19.6. As for the US session today, few economic figures will be released from Canada and the US, which also unlikely to have a notable impact or a significant impact on the market. In Canada, we'll be waiting for the housing starts and the building permits, and the estimates are to show a solid improvement for the month of May. And in the US, the labor market conditions index is expected or will be released again at 14 GMT time, with no estimates so far after declining toward minus 1.9% last month. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.